What is up, guys? It's the Dragon back to with another video. So in today's video, I'm going to be showing you the only Fibonacci strategy which you need to be extremely profitable. And secondly, I'm going to be showing you a bunch of things which people don't realize about fib levels that can actually take your profits from being sort of average to actually exceptional whenever you use this tool. So there's a lot to cover in this video. I don't want to speak too much. Let's just get straight onto it. By the way, guys, quick note from the future. I just opened a Telegram, dropped the link in the description. It's live signals, tips, and mentorship. So make sure you follow it. Let's get back onto it. Now, the Fibonacci level, guys, is an incredible tool. It's probably one of the best predictive tools in the entirety of trading, whether you're trading stocks, forex, or crypto, which is why it's such a widely spoken about tool. However, there are some things which people do which somehow manage to make them take huge losses, even when using this fantastic tool. And I'm actually going to highlight exactly what some of those may be right now. So as we can see, we're looking at GBP USD right now, and the prices have just made a huge drop, right? So what I'm going to do is I'm going to wait for a little bit of a retracement whenever that happens, and then I'm going to start drawing my fib level and trying to trade it using it for a retracement trade, right? So I'm going to draw it right from here all the way down to here, since it starts to retrace a little bit, and let's see what the price does from here. And I'm going to show you guys what most people do versus what you should actually do as a trader. So the price is moving upwards. It's just hit the 50% line. Looks like it faked a few people out, and it's coming towards one of people's favorite places to take a sell on the Fibonacci level. So the 60% line right here. So what it's done, it's come in, it's touched it, and it's posted a huge bearish candle. So a lot of people, I think, would probably enter their trade right here, but me personally, I would not, and I'll show you guys exactly why not in a second. So most people will probably enter their trade here, and let's take a look and see what actually happens. So the price has just blown through people's resistance right here. The 60% line did not hold up, surprisingly, and the price is just straight up shot through. Alright, so that's the first thing. Anyone who was putting all their faith in the fib levels right here was just thinking they'd sell as soon as it touched this fib level. They would have got took out of their trade, and the price has just continued shooting up. Let's see what happens now. So the price has actually broken through the 70% line as well, and sort of made a little bearish candle right here, which is above the zone. Now, this might be very confusing to a lot of people, because a lot of people would not think to enter a trade using fib levels above a zone where the price has already broke through. Now, I'm going to show you exactly why this is not what you think it is, right? So what we're going to do is we're actually going to scroll back, and we're going to use fib levels in a few examples from the past. So right here, where did the price reverse? Reversed a little bit past the 70% line, about 30% worth of the way through that fib zone, right? Where's the next? Well, we can actually do a bigger retracement right here for the same low. So let's see where it was here. Here it was about 70% of the way through the 60% zone. So far we have two which didn't reverse exactly on the fib level. Right, so let's take the price from up here, see what happens right here. Okay, finally we have a reversal exactly on the fib level of 60%. So far it's 2 to 1. What else do we have? Okay, so here the price has just come in an uptrend. So not so many opportunities here to use the fib level in the same direction. You can see something right here. Let's see how this goes. I'd say the biggest retracement we see in this zone is right here, and it was about exactly at 60% line. So far, we have had, I believe, 3 to 2 ratio of three times where the fib retracement did not actually work in the way which most people think it works, and 2 times where it did, where it just reversed off the 60% zone, which is basically where everyone using the fib levels looks for their trade, right? So why am I saying that we should enter this trade when it's already blown through the 70% line? Guys, the thing about forex trading is, yes, sometimes the regular trade will work out, right? Sometimes your horizontal support will just get respected and there'll be nothing more to it, and you'll just make a simple sell or resistance trade. But how often does that happen? Forex is full of games, full of institutions manipulating the price, and so things are never that simple. Now, when it comes to fib levels, these are no different. So what we've seen is that 3 times out of 5, the fib levels actually were not respected perfectly and the price reversed in the middle. So that's our first thing. Secondly, we saw that the price most often reverses around the 60% line. This is why everyone likes this line, because it reverses most often there. But does it reverse at the highest rate at this line? In my experience, I've actually found this to not be the case, right? So sometimes the price reverses here. Yeah, it might reverse here 50% of the time, but 50% of the time it breaks through, right? However, when you look at the 70% zone, it tends to be that when the price is reversing around here, it'll reverse maybe 70, 80% of the time it actually hits this zone, which basically no one actually pays attention to, which nobody actually cares for. So that's the second note which we've got here. Now, if you combine these, then you'll realize that when you're trading Forex, you actually want to always take your bet in the highest probability zone of having a profitable trade. In our case, yes, this is the 70% line, but also we have seen that the price will often reverse in the zone in the areas between the fib levels. So what we want to do as traders is wait for the price to break through here so that we are avoiding all potential losses, right? So what we are avoiding is we're avoiding a loss at the 60% line. We're avoiding the loss in the middle where the price sometimes reverses. We're avoiding the loss at the 70% line, and we're taking our trade somewhere around here in this zone above the 70% line for an ultimate high win rate, right? But we're not just using that, we're also going to use a confluence. What this means is that we've avoided a bunch of losses. However, we have taken the last possible and most likely trade for any trade thesis which says, okay, the price started up here, it's gone down here, it's going to make a retracement and reverse, right? So if you are someone who says those two sentences, the price started up here and it went down here and it's going to reverse at one of these fib levels, then this is the last possible zone that trade thesis stays valid. After this, it's just a new trend, right? If it breaks this high, it's just a new trend, which indeed means that this is the last possible point you can take this trade. But I would never recommend taking a trade solely based off one confluence, which is simply the fib levels right here, which is exactly why we don't enter the moment it touches the 70% line. So what we're going to do is we're going to look for a second or third confluence. So we actually already have a second confluence. Now that I think about it, we have this bearish candle right here. So let's look for our third one and final one. So we're going to look for a resistance or support, which is not the one which we've already found. So first off, we have this. The price isn't really touching there yet, so that's not very good. Although I would say that this resistance is far too high in the zone to be a confluence anyway. Like if the price moves up here, I wouldn't be so certain about taking a reversal trade anymore. So let's look for anything else. We have a low here and we can't really do a support becomes resistance trade, so that doesn't make sense there. We have this level right here. This is far too high. Let's zoom in a little bit. We have this right here, but this looks to be underneath. We have that right here there, which seems to be over, but only by a little bit. But I actually like that. So we might consider taking a trade if the price touches this line right here. This might be the one. And then what else do we have? We have this, which again is underneath. Is it underneath? No, this one's slightly above. That's the thing about these supports and resistances over long periods of time. You have to actually look very closely and make sure you're drawing these right. So let's just make sure we're drawing these accurately. It hits the candlestick close there, hits the close right there. So that's accurate. And let's see how this, okay, so this is actually our third confluence. And this is why now I would take this trade, right? So I would take a trade and I would do as so. I would take my trade, I'll put my stop above this zone right here and above this resistance, and probably put my target a fairly conservative range. Where can I put it? I could put it around here, which is above the 30% line. This is a pretty conservative trade, but it has a risk reward of 1 to 6, which is pretty good, 1 to 6.5. So let's see how this trade pans out. And it looks to me as though this trade has panned out perfectly. Okay, so this is just tapped in to our take profit. And basically the trade has gone on to blow through and just go way further than our take profit. And the reason that this trade, guys, was so guaranteed is not only did we find 3 confluences, but in all types of trading, whether this is Forex, commodities, cryptos, or stocks, the larger a pattern is, the more valuable it is, right? So if you have a small little descending triangle, which happens up here just like this, right? Like a small descending triangle like this is not a very reliable pattern. Like the price might just blow upwards and break through. Now, on the flip side, if you have a large descending triangle, which looks like this, that would be an incredibly consistent pattern, and that would definitely be something to take a trade on. So basically, when it comes to trading, the larger price action you're taking into account, the more likely you are to take a profitable trade. And Fibonacci levels are exactly the same. They're no different. So the fact that we use several months worth of data in this fib level right here contributes largely to the fact why this trade was so easy to see for me and so easy to take. So guys, that is how you put together a profitable Forex Fibonacci strategy. I would highly recommend applying this to your own trading, waiting for a few confluences and entering your Forex Fibonacci trades at the 70% line or even a little bit higher. And just remember, it's important to have multiple confluences whenever you enter a trade. So you never want to enter just because something touched the fib level, which is what everyone else is doing, because institutions are going to push the price higher. They're all trying to compete against each other. They're all trying to stop each other out. So you don't want that. So yeah. So guys, I hope you enjoyed this video. I've got a Telegram group now, so make sure you join it. Link in description. I will see you guys in the next one. Peace out.